again, Maverick traders. Welcome out to your RBNZ rate decision tonight. Corey here with you. And as always, we've got plenty to cover. So let's dive right into it. To start, let's kind of assess what's going on here. So interest rates are currently at 5.25%. The projected rate is expected to increase by 25 basis points to 5.5%. Remember that this is on the back of the prior meeting, which was a bit of a surprise in that last time we met for the RBNZ, the expectation was that they would raise rates to 5, and they actually raised them all the way to 5.25. There's also some rumblings that not only will they raise to 5.5 on this meeting, but they might raise their projected target to 6%. So the expectation is that rates are trending higher and that they might even push them higher still. Now, there's some government spending programs, there's some economic data, there's some different things happening there in New Zealand that's propelling this, that's fueling this. And so it makes sense that they're not done yet. And I think the bigger story will not be if they go to 5.5%. The bigger story will be if in fact they raise their expectations and say, hey, we're not going to stop until we get to 6% and so forth. Now, if we look at a chart of rates, you can see that for the most part, and this is pretty commonplace, when rates begin, they go in trends. And when we say that, you don't see central banks, they don't cut rates and then the next time raise rates. And then they go back to cutting rates and then go back to, they just don't do that. They go in trends. So they are in a rate cutting cycle back here in 2015 into 2017. Then they were in a holding pattern. You'll see that quite often where they just leave rates unchanged. Notice all throughout 2012 and 13, leaving rates unchanged, right? Rate cutting cycle through here, they hold another rate cutting cycle, and then they hold a rate hiking cycle. Now, if the projection is that they're going to 6, again, that's raising expectations, and that means that this trend lasts a little bit further and a little bit longer and so forth. And it's always at these turning points that are most critical. When you really think about it, there are things that are already priced into the markets. And what do we mean by that when we say something is priced in? Well, priced in means that this has already been forecast, it's already known, the market's already had time to adjust and basically do the buying and selling and things that get that factored in, that get that priced into the asset, right? And so that's why when these changes take place at the corners, when they just start a rate hiking cycle, is so important because now the market essentially has to say it's not just one, we're not just going to raise rates once, we're going to raise rates for a trend. That's very commonplace, right? And so they trend higher. Now, did rates go up more? Did this just trend keep growing? Did the initial announcement, maybe they only projected that they would go to here, but the market had to factor in multiple rate hikes, right? And then they got a realization, hey, there's even more coming. And now there might be a realization that, hey, there's even a few more. So this trend persists. At some point, we'll go into a holding pattern for a while, right? We'll get that flat top type of dynamic. This is true. In this case, we're looking at the RBNZ, New Zealand's central bank rates, but this is true of any central bank. If you were to look at the Bank of England, if you were to look at the Bank of Canada, or in the US, we call it the Federal Reserve, it's the same type of idea and concept where it will go in trends, right? At this point, when they just started to cut rates, you can't just factor in the first rate cut. You probably factor in a few more that are coming. And then again, it can grow and grow from there. You probably didn't project right here that all of these rate cuts would come over the next few years. You probably didn't project that interest rates would go near zero. And the markets didn't do that. They didn't price it all in immediately, but they have to price in quite a bit, and they have to price in, again, more trend and that sort of thing. So the question is how much is priced in already to the New Zealand dollar? That's what I always ask myself is, okay, Is this a known or is this an unknown? Is this something that's already been priced into the market and they knew it was coming and so forth? Well, I think a little bit of the price action you're seeing in the Kiwi is in fact this pricing in of the terminal rate being higher and going towards 6%. Now, if we look at the Kiwi, here you can see the New Zealand dollar chart. I mean, we've been in a downtrend here since late 2022, and we were in a downtrend that persisted all throughout this year with a series of lower highs and lower highs and lower highs and so forth, right? And it created, I mean, it's just a perfect downward trend. We're trending lower, lower lows and lower highs and lower lows and lower highs. The market's bottom down here in April and proceeded to trade up to the trend line, but this time it did something different. It broke through. So it had, I mean, this is the most impressive rally we've seen on the chart, right? And that rally took us up and through resistance. That's important. We've drawn in this trend line for the past few months looking at the New Zealand dollar. Now we see that a couple of weeks ago, the New Zealand dollar pulled back to the trend line. And we highlighted this when it was happening. This happened a couple of Wednesdays ago because we meet for our midweek currency trading room live every Wednesday. And our Maverick traders, no doubt, were well aware of this. We talked about it at the time. And we talked about that this creates a pattern that in essence is a commonplace pattern where if you're in a downward trend, it's often the trend line break and then subsequent retest that creates this pattern. So you have this downtrending line and then it breaks and retests. And what is it? It's an inverse head and shoulder. It's a guy standing on his head. Here's a shoulder, here's a shoulder. See the shoulder, and here's the head, eyes, nose, mouth, and so forth, right? It's called an inverse head and shoulders, and it's just meant so that you can identify a picture and identify what's really happening. And what's happening is a trend reversal. The fact that we're no longer making these series of lower highs and lower lows, we've now broken above the downtrend line and have created a higher low. And so we were buyers on the Kiwi here a couple of weeks ago and said, hey, this is a nice opportunity. Get long. It's the best looking of the risk on currencies. I've been bullish on equities. I thought we would move towards a risk on approach. And the equity markets, the S&P 500's been in a nice cup and handle. It's been breaking out, so on and so forth. We thought that there would be money coming out of the risk off, gold and crypto and some of those things where people were hiding out. And that's playing out. So the question is the Kiwi's at a tough spot here as we go into the RBNZ meeting, because if we were here, it'd be a screaming buy once again. But that trade has come and gone. We talked about it a couple of weeks ago. We have to make a decision right here. And right here is less comfortable for me. We've had a nice, huge rally. Yesterday, we formed kind of a bearish engulfing, and today we're bouncing back a little bit. It's not a super clear, hey, this is a great time to buy, or you should be short. It's a little bit debatable. I'm leaning towards the short Kiwi trade simply because I see a price overlap dynamic. One of the things is when you see a big reversal like this, and in this case it's a bearish reversal. You see this big red candlestick, right? And this red candlestick sort of engulfed or swallowed up that candlestick, didn't it? And after that engulfing type of formation, that big reversal, so you have the smaller green candle getting swallowed up by the bigger red candle in essence. Well, that's a trend reverse, or I shouldn't say trend reversal. That is a trading range reversal, meaning we've set a swing high and now we'll probably pull back for a few days. So I'm leaning that way. But when you have a big sized candle like this, it's pretty common for the very next candle to have just a little price overlap, and that's kind of what we're doing today. See this little green candle, how it's kind of overlapping a bit with this big red one. It's not recovering all of the losses, it's just bouncing back a little, and that's usually more of a, hey, we can short on this little rebound. If we come into the shorter term charts, you'll see yesterday's reversal and the little bit of a bounce back here. If we come into a little bit, 4-hour chart, you can see the sell-off, and now we're bouncing back a little bit. Now on the 1-hour chart is really where you get a more bearish price pattern, and this is what we're trading is on a little bit shorter time period. So Kiwi has rolled over a bit on the 1-hour chart. See the uptrend that's been intact. See the moving averages, perfect, 20 above the 50, upward sloping, everything looks great. Well, now downward sloping, 20s crossed below the 50. That's a little bit of a short-term downward trend. We're rallying a little into the announcement here, but might just be kind of a basing before I think we could see a little bit more deterioration. If we come into the 15-minute, go even one step further, or even the 30-minute, I guess, would be the next time period, you can see it's pretty similar to the 1-hour chart, just in terms of you were in an uptrend, now you've reversed into a downward trend. So I'm partial to that side of things. One, because we're trading just a short-term news announcement, and two, that's ultimately the setup that I see. Now, if we come to some of the Kiwi pairs, do we want to buy Euro versus Kiwi? Well, it's a possibility. It wouldn't be my last choice by any means. Do we want to short the Kiwi against the yen? Well, the yen hasn't been great, so that might be questionable. Aussie certainly doesn't look like it's a buy versus the Kiwi if we're playing the Kiwi lower. Pound looks okay, although it's reversing a little bit right here. Did I skip CAD? There's CAD. Kiwi against CAD. Now, I talked about CAD on the daily chart in the Currencies update yesterday. I was covering that for Onkit, and we talked a bit about the CAD. If you come into the CAD, we talked about buying yesterday right here, right? Retest of this old breakout zone. See this line here, and it kind of pull back, and see the nice bounce yesterday and into today. And not just that pattern, in fact, but also sort of a cup and handle dynamic. See the cup and the handle. So old resistance, new support, and cup and handle. So you've got perhaps patterns within patterns, in essence. A couple of reasons to buy. So we're coming into the announcement. My instinct would be Kiwi CAD. Now, I already had it up on these other charts, and we're going to be looking to short this. So we would have some sort of sell order ready, something to that effect. Let me drag this up, and let's just put a hypothetical. I'm not going to be trading on this platform, but we'll just build some hypothetical. Say we were going to trade, 3 lots or something like that, and then we could even attach brackets to it, and we could say, okay, where do we want to take profits? Well, maybe down here. And where do we want to stop out? Well, maybe up above right here. And we'll just throw in a couple of prices, and then we can move these wherever we want them, right? But we would have something ready, in essence, to trigger a potential short here on this announcement. Now, what we're always looking for going into an announcement is a burst. In this case, I would prefer that it be that we see, maybe it shoots up a little bit, but it should start to roll over. And as it starts to fall down, and this should be red, starts to get bearish, that's where I'm more inclined to say, okay, we're starting to see some selling pressure come in, and feel confident that it can trade back down to these lower levels. And there's a decent, that's 40 plus 25, that's about 65 pips down to that support. See the red right off the bat? So I would go ahead and we can get an order triggered. Now, it doesn't mean it's going to execute, because again, this thing is moving very rapidly, but have it ready, and if you acted quick, could have potentially triggered that. But again, I'm not going to be trading it live on this screen, but just to give you a sense. Now, see the burst, see the energy. Usually when this happens, it doesn't mean that it's done necessarily. You could easily have just some choppiness in here, and we'd have to consider possibilities. If this just runs right down to that support, well, it's going to be, which is basically what it's doing, it's just acting quickly. So we had the right idea with the short Kiwi, but there it's already triggered a potential target, and it's already moved 65 pips in that direction. So we can't chase it shorting it down here, and the trade, that short-term trade, is already somewhat finished. So if you didn't act quick, and I don't know how you really could have caught that unless you had an order ready that was at a little bit lower limit, just ready to go. I did not catch it. It moved quick, and the order that I have out there did not execute on my other screen. So anyway, that one moved pretty rapidly. Here you can see it in the chart, the Kiwi really falling back, and that was kind of the expectation is, hey, we had a little price overlap, you probably drop down here. Now, I don't personally think that it's just going to keep cascading lower. I was looking at it just for the trade, just for that more simple trade of a downside move. So we were certainly hunting in the right spot, but that just simply isn't going to be an opportunity for us tonight. So a little bit disappointing that it moves so rapidly. Let's come in here and take a look. So they did raise to 5.5, and I'm going to guess, so the Kiwi would tend to go up if they were more hawkish, up if they were raising rate expectations and so on. I don't know what the news is. I almost expect that they didn't give any guidance that the terminal rate is going to 6. I'm guessing that they didn't raise future expectations much, because the market seems to be a little bit disappointed in terms of the rate hikes and feeling like, hey, all these rate hikes are somewhat priced in, and let's go ahead and take some money out of the Kiwi. Not surprised by that at all. I'm just sort of guessing at what's driving this. Maybe the market was thinking and leaning towards them being more hawkish, and they didn't come in as hawkish. That would be my guess, just in terms of the price action. But who knows for sure? We would have to look at the details. The important thing is, well, the trade and having the right idea, the right concept. And again, I think this is one where you'd have had to act really quickly, and you'd have had to have an order that was ready at a little bit lower price down here. If you had had an order ready maybe down in here, it wouldn't have offered as much profit potential down to the support, but still would have been a nice trade and a nice risk to reward, and certainly would have been a profitable outcome given the selling that's happening in the Kiwi. So tonight we're going to have to chalk this one up as, hey, we were looking at the right spots, we had the right trade idea, all the right concepts. More of an educational class than anything else, because again, we didn't get the trigger, we didn't get the execution, but good learning opportunity, good learning environment, if nothing else. So we'll leave it there. Thanks everyone for joining us for the RBNZ tonight. Hope you enjoyed it. We'll be back tomorrow for the Maverick midweek. So come and join us live in that meeting, and we will see you all next time. Goodbye, everyone.